Hello, good afternoon. You're watching Closing Trades on ET now. I am Anisha Jain. With me is Nikunj Dalmia. And the closing trades are okay. It's been very sideways day. To be honest, there hasn't been much movement, at least at the index level. We started off well. The advance ratio was looking quite solid. But then during the course of the trading session, it took a turn for the worse. Nifty continues to face a solid resistance around 19,600. Having said that, there are spots of green. PSU banking names are definitely bouncing back. So that index is up almost 1.5–2%. Pharma is having a good day, so we are watching out for that. ICICI Bank, in fact, from the banking pack, is the top contributor on the Nifty. So that's adding weight on the upside, while Reliance is the biggest drag. It's only 0.5% down. But that's the kind of market we are in, that there's very limited move even on stock-specific basis. It's been a tempered start in Europe as well. Most of the indices have started with a cut of around 0.5%, and the US futures are looking weak as well. So the entire outlook seems to be suggesting that it's going to be a bit of a sideways move, but can't say it's sideways for Adani Ports because the numbers were just out and it's a beat on all parameters, whether it's the top line, the margins or the profitability, and the guidance as well is quite solid for the coming year. And you have seen quite a bit of reaction as far as the stock is concerned of Adani Ports. Maybe we should pull up the intraday chart of that one, because that will tell you the kind of move that we are seeing on an intraday basis as far as that stock is concerned. But having said that, Nikunj, not many moves today. It's fairly quiet today.
Yeah, I mean, all you need to do is like take up a pencil and put a straight line. And that's the index for you in terms of what the range really has been. You've just been in and around a 100-point up and down on the Nifty. Index of 100 on an index of 19,000. If the move is about 100 points on either sides, that just tells you that there is lack of interest, or maybe the pull and the push pressure right now, I think, is getting equalized. See, the markets have not broken down, so nobody would attempt a short. The markets are not very cheap, and the last week's reversal is something which has been a painful reminder that markets are showing signs of fatigue. So nobody is also really going against the general mood point in the market. So the mood, I think, is tentative, and typically when you have a tentative mood, no trigger, end of the earnings season, a big event like RBI credit policy, markets, they just tend to meander in a very narrow band, and I think that is what is happening. Well, yesterday it was Adani Green, today it is Adani Ports, which clearly seems to be reacting, acting, and moving on numbers. So it's just one of those days where you would say that you have to use a magnifying glass to identify some large powerful movers, and yet you will struggle, right, Kunal?
Yeah.
I mean, I'm actually really staring on the screen to say, okay, which are the big movers, and cannot find too many.
Yeah, and I think these are times when the indices are consolidating, so we don't expect too much of a trend on the index, neither in terms of individual sectors and stocks. Now, the only sign or a preemptive indication of a trend could begin if we start to see a sector move or the tilt of markets towards a particular sector. We've not seen that happening in the last 3-4 days of the bounce, or even the prior 4-5 days of the market correction prior to that. So when you have a zone where the markets are, or no major sectors are giving any kind of a major signal, that's also an indication that the markets could, or the indices could be range bound. We flagged off the options data as well, that how the options data indicates that there has been majority tilt towards the writing of the call and the put options, with an expectation that the index would remain into a range of 19,500 to 600 broadly. And we are stuck into this 100-point range since the last 2 days specifically. So expecting the same unless there is any kind of a major change in terms of the options data.
Okay, but we have tried to find out some stocks which are at least reacting to some sort of news flow. So let's address the stocks and news as well. In terms of earnings, of course, it was a strong show from Automobile and J Kumar Infrastructure. So they are reacting positively. Add to that list Adani Ports as well. On the weaker side, Monte Carlo and Electra Green Tech are seeing a cut of 5 to 10%. Gland Pharma, that one is shining away in the trading session. Upgrades from the likes of Axis Cap, Jeffries, you name it, Kotak as well. They've managed to upgrade the target price. So that stock is sitting with a gain of 20%. Locked in the upper circuit, and those details should come up for you shortly. So that's the stock at 1611. The other one that's firing away on all cylinders is Hero MotoCorp. Of course, that booking numbers came in for the Hero Harley X440, a booking of over 25,000 already there, and that's the reason you are seeing that stock high by around 4%. Naresh, your take on Gland Pharma and Hero MotoCorp? Would you look to buy this advance? Is the momentum likely to continue?
So Gland is a tough one, given that it went through a long downtrend as well as quite a few gap downs previously. The last time it tried to break out that 1400 mark, it had hit a 20% circuit, then faded off and then saw a drop all the way to 950. So I would wait for some more consolidation around 1400, 1500 before taking a call. This move is a one-way move. So last time also it faded off, so I'll wait it out. Hero MotoCorp continue to maintain the same stand. The longer term charts are extremely bullish. The stock has done nothing for a long period of time. Stock used to be 3,000 back in 2015 also. So for now, the breakout about 2950 got retested, and we've started making a recovery from the same support zones. The next breakout move comes for the stock once it's about 3200. So still a buy on dips to 2950 to 3000, and a target price of 3600 to 4000 in the long term.
All right, now what are the gainers? Madhav, let's take ideas from Kunal. Yes, Kunal. Let's take some ideas in terms of what you do in this range bound market.
So again, the action is stock specific. So we'll go with a couple of buy calls. GAIL is something which apparently looks very attractive. Now, the reason why it's looking attractive is because the risk reward from 122 last week, the stock has come back towards 116 mark. And I think at current levels, I would believe GAIL should be good enough for a retest of the previous high. So 124 is what I would look out for in terms of target, and stop loss at 112. PNB, Punjab National Bank, these PSU banking stocks are making a comeback. So we discussed PNB in the morning. So we want to flag off the stock again. Targets remain at 66, stop loss at 58.
PNB and GAIL. Now PSU banks, unfortunately, last couple of days they've not really exactly moved on a very strong note, so to speak. Well, it's Gland Pharma, whether it is on volumes, whether it is on price action, Gland Pharma, the business has a turnaround. Well, the management is indicating that. So what went wrong with Gland Pharma? Price erosion. A lot of the markets, a lot of the products which they had, they went off patent. There were supply chain issues there, and there was a pricing pressure. A lot of the products now are coming back. So they are gaining some degree of pricing power. API market seems to be getting better. So these are two factors which in a sense are really aiding Gland Pharma. The stock had plummeted. For a couple of quarters they disappointed. Markets had lost hope. And typically when a beaten down stock where everyone has lost hope talks about a linear growth for next couple of quarters in a bull market like this where markets are hungry for ideas, the stocks they get re-rated. And I think the similar phenomenon was applicable to Zomato, where everyone had lost hope. Nobody thought that they will ever make profit, and when they declared a profit, everybody started doing cartwheels. I guess the same bulls are today maybe selling Zomato, buying Gland, I don't know, but just a coincidence that the market right now is clearly reacting. In some case, I would also say overreacting to good set of numbers. Rahul Shah joins us now. Rahul, Zomato earlier this week, Gland Pharma today. Which is the next big one which could be called as a turnaround story now?
Good afternoon. A good question, Nikunj. I think, as you rightly pointed out, Zomato, I think the stock had done quite well in last couple of months. And if we see last quarter's numbers and this quarter numbers, good turnaround. Similarly, I think if you look at it in terms of percentage gainers, from last quarter numbers till this quarter, I think Gland is almost doubled. If you look at it, I think 850 or 860 was the low post last quarter's numbers, when there was a very weak quarter, and I think there was a complete sell-off in the markets. So I think same has been seen in the stock doing quite well. So I think which will be the next, I think, which will be come to know once the stock has done well. But the way the markets are, I think the market is just taking a breather right now. So I think still there could be a lot of value if you talk about it. Then I think still a lot of names, like I think in a banking space, I think it's in a PSU space, definitely I think have taken a breather post numbers. So I think this could still, for the next year and a half, there could be a rally in the PSU banks. Now, if you look at it vis-a-vis the longer term valuation in a 10-year average, if you look at it in the most of the PSU banks, which trade at 0.8 times price to book. Now, I think most of them are trading 1.1, varying to banks. So I think the numbers were good. Margin expansion, loan credit growth, everything I think looks all right. So my sense is I think PSU banks should continue to do well, and especially in the second round space, I think should do well.
You want to specify within the PSU banking basket, as you pointed out, because today as well, that index is the top leader and by a good margin, because that index is up 2.8%. Indian Bank is soaring around 9%. Bank of Maharashtra, Union Bank, Bank of Baroda, they're all firing away. Any favorites that you want to talk about from the second order rung that you pointed out?
I think if we talk about a stock like Canada, which reported a stronger number, so I think that should do well. And if you look at it pre-COVID and post-COVID, the stock has done nothing if I look at it. But from the COVID's lows, and if I talk about it, then the stock has already done, two and a half, three times if I look at it from there. So I think in that space, I think like Canara Bank looks one of the preferred bets. Second, followed by Bank of Baroda. I think decent set of earnings in the Bank of Baroda as well. So I think these two in the large names post SBI, I think these two should do well. And thirdly, I think if we look at it, Jammu and Kashmir Bank, the stock has done also has been doubler in last year and a half. If you look at it, similar to the most of the PSU names, but I think this bank also with a smaller reach in terms of where the stock has been and where the management's commentary has been in this last quarter number. So I feel JK Bank also looks very promising in the small banks amongst the PSU bank.
J&K Bank 70, it's not one of those stocks which you track frankly on a daily basis, but yeah, it's a turnaround which clearly is making. Rahul, it's, a lot of old timers would say we like banks, but we like big banks. We like big banks because they have CASA, they have branch, they have technology, they have clients, and they are gaining market share. Small banks is more like renting these stocks. Big bank is like marrying those stocks. Which way would you lean?
See, it is depending upon the investor's profile to profile. So if you are a large cap holder, and if you think you are happy with 12-15% compounding kind of a story, then yes, large banks, as you rightly pointed out, and are not willing to take a risk, then I think yes, like banks like HDFC Bank, just stay set together and sleep over it. So that could be one of the, the thought process. Secondly, if you are willing to take a risk and if you think that the returns could be compounded better in terms of the growth, if we see, then I think that would be a banks like a smaller banks, as I mentioned, like Jammu Kashmir or something, which can give a good return if the things goes well.
Point taken. It's time now to slip into a very short break, but as we do that, listen in to the voice of Jonathan Garner, because he's trying to tell us what his view is on India, because he says that we should get accustomed to strong flows by institutional investors as well.
If one looks at the global scenario, 2022 we saw mass outflows out of India to China. When we started the year, that pattern was at play. But since April, foreign institutional investors have come back into India, both by the portfolio route and by the FDI route. Do you think this could be a multi-year trend in making, and now we should get accustomed to strong flows by institutional investors, especially foreign institutional investors, into Indian equities?
Yes, we do. What we now know is that the economic recovery in China has been very lackluster. And certainly there is a debate amongst investors as to whether it's reached an important multi-decade transition. Its demography is quite adverse, and that's in contrast with India in terms of the population age distribution. And that matters not just for themes like consumer, industrials, financial stocks, earnings, but it matters for the demographic that can now buy equities in India. So again, for China, the near-term issue around leverage and the property sector's issues is causing a real challenge for policymakers, and it is weakening the currency. Whereas on my recent trip to India in June, I was very struck just how strong the economy is across the board in manufacturing and services PMIs, and real estate transaction volumes and activity, in inward FDI and infrastructure construction. It's a very interesting story to us in India.
Welcome back. Well, shifting focus to earnings, reported just a while back, Adani Ports managed to deliver a good beat on all counts in the quarter gone by. Let's hear out company CEO and whole-time director, Mr. Karan Adani, on the performance and the road ahead.
I'm happy to inform APSEZ has delivered its strongest ever quarterly operating performance in quarter one of FY24. With record quarterly cargo volumes and financials, despite our operationals being adversely impacted for around 6 days due to the cyclone Biparjoy. I'll provide some highlights of the quarter gone by and our expectations for FY24. Firstly, the port business performance. APSEZ handled 101.4 million metric ton of cargo during the quarter, reflecting a growth of 12% year-on-year. Within India, our cargo volumes grew by 8%, is around 3 times the country's cargo growth rate for the quarter. As a result, our market share in India has jumped by around 200 basis points to reach 26%. Our flagship port Mundra, despite being shut for almost 6 days due to cyclone, handled container volumes of 1.72 million TEUs. This is 12% higher than its closest competitor. Our continuous efforts to enhance operational efficiency have resulted in the port's EBITDA margins increasing by 150 basis points to 72%. Our newly acquired asset, Haifa Port and Karaikal Port, have ramped up as well, with average monthly cargo volumes now crossing the 1 million metric ton mark for both the ports. Talking about our logistics business, the rail volumes jumped by 18% year-on-year to reach 131,420 TEUs. Bulk cargo volumes increased by 40% to reach at 4.35 million metric ton in the quarter. Our logistics EBITDA margins also improved by 150 basis points year-on-year to reach 28%, which is higher than the reported EBITDA margin of our listed peers from India. Now let me discuss the financials. Consolidated operating revenue for the first quarter increased by 24% year-on-year to reach rupees 6,248 crores. Consolidated EBITDA for the quarter grew by 80% year-on-year to rupees 3,765 crores. And the profit after tax for the year also increased by 80% year-on-year to rupees 2,119 crores. APSEZ
It's coming down. Gradually, slowly but surely, it's just coming down. It's not like a big glide or something, but it's coming down. Banks are holding on, especially PSU Bank. Tata Consumer is the odd one out. But Zomato has reversed completely. Someone's selling out of Zomato. What else do we have? I'm scanning through some trends. You've got Indiabulls Housing Finance, Hindustan Copper, Loris Labs. These are some of the outliers. On the losing side, you've got this properties, Reddington, and you've got Max Health. These are some of the losers. Rahul Shah, there is one space which has really been the massive outperformer of late, and that is the entire hospital space, not hospitality, hospital space. It's strange, right? Either you celebrate or go to hospital. Both those sectors have done well, hospital and hospitality. Hospitality, we know why it's doing well, but why are hospitals doing well?
I think if you look at it in last 1 year, a year and a half, I think if you look at the trend, I think a lot of defenses have gained. And in last 2 quarters also, I think if we see the defensive plays have played very well. So it was consumer first if we see, secondly followed by pharma, and obviously and hospital space has continuously been doing well. So I think and there's a tremendous growth still can go in this kind of in this space and in a organized place if you look at it. So I think on a listed you have 4-5 which are listed players, and it could be more. So I think this could be a growth, and this could be a good retail. If we look at, if we compare like something franchisee network kind of stuff, and if we have the entire network more been developed, there are serious large players. Like I think if you look at Apollo or Fortis or so and so. So I think there could be still growth in this entire sector as a whole. A lot of growth still can continue, and I think from as competition from an unorganized players, I think this could be a better bet. So I think if I look at it overall, there could be still the valuations of obviously are stretched for a couple of them, but I think still looks interesting in this space. One should have an allocation in their portfolio, in whether it is small hospitals or maybe in a larger place. I think one should have an allocation in it.
As far as Max Healthcare is concerned, but I also wanted to shift focus and talk about the entire auto space, especially what's happening in the two-wheeler. Premiumization is something which is working out across the board, and Hero Motor 2 is roaming in trade as the latest Harley X440. That's the word, roaming.
No, but that's used for car for motorcycles.
For motorcyclists, well, you do give that race, right? Vroom, vroom.
That's for cars, yeah.
That's for motorcycles.
Motorcycles, more than cars, actually.
More than cars, yeah.
What if I have automatic?
I think you've just been driving cars way too often to realize what happens with a bike. But nonetheless, it is soaring in the trading session. Let me put it simply. See that there's a vroom vroom happening
That's
on the
Sumit
screen.
Chaturvedi. That is Sumit Chaturvedi. That good old ET now, Sumit Chaturvedi. So
I know,
don't
trying
know what
out.
vroom he did. Okay, the stock is up 2.5%. Why?
Yes, but we have Shrishti joining us to talk to us about how the comparative has been in terms of sales of Harley versus what was happening with Eicher as well as Bajaj Triumph tie-up. Shrishti, take it away. Tell us the details.
Well, yes, that's correct. That Hero MotoCorp is booming into it today and no breaks since the start of the day, and that's on the back of the booking number that the company has shared for its latest premium offering, that is Hero Harley X440, and that's the X factor that coming into play because the company says that just in 1 month time they have received over 25,000 bookings, and that's a substantial jump when we are comparing those numbers with Bajaj Triumph launch. We'll talk about that in detail, but have a look at the premium bike offering which you were just mentioning too, because 65% of their booking are coming in for their top end variant. And do mind you that on the price differential we'll talk about that in detail as well. We will see that how Hero MotoCorp is placed. But coming about this offering, the production will start in September and the deliveries will start from October onwards. And before that, we are seeing such confidence build up into the consumers. And for now, Hero MotoCorp has actually stopped taking further bookings. They have halted that procedure, and going ahead, they will come out with new dates. But they are taking this as an opportunity as well, because they have raised the prices of their offerings, because from 2.29 lakhs to 2.69 lakhs of bracket, they have raised 10,000 rupees per model, and now this stands at 2.39 to 2.79 lakhs for all the three models. Let's compare this with what Bajaj has been getting as well as how Eicher is placed. Talking about Hero Harley, more than 25,000 bookings. Bajaj Auto as of 26 June with the Q1 con call update, they had 17,000 for the Bajaj Triumph offering. But when it comes to the comparison with Eicher Motors, then we have seen that Hero MotoCorp and Bajaj came up with their offering, which was actually a premium segment, which was at a higher prices what Royal Enfield Classic 350 is offering. But when we talk about the valuation perspective, then maybe investors must be finding some comfort over there, because for Hero MotoCorp that is seen to be trading at close to 17 times 1 year forward, while Bajaj Auto is at 18.2 times, and while Eicher Motors continues to trade at a premium valuation of 24 times. So all these factors are play, but 25,000 overbookings is something that even the analysts were not expecting, and that's the overwhelming response onto the stock price and the booking number.
Okay. Rahul, they say that if you want a view on Hero MotoCorp, always go to somebody in Ramdev's team.
So I think
why is the stock underperforming? I mean, how much of this new bike launch would be important for Hero MotoCorp? Because this is not going to move the needle. I mean, theatricals aside, it's not a needing moving launch.
So I think two things. I think the numbers were also not good. And if we look at it last year and a half, I think the two-wheeler space entire. Especially Hero, the numbers were, I think, lackluster. So I think, and if we look at the July volumes, also what autos have been reported, so I think two-wheelers was not so encouraging. So I think if we talk about Hero, then I think obviously this was in last 2-3 quarters. If you look at it, the numbers were disappointing. Plus the overall sales number, month-on-month sales are also not so exciting. So my sense is, I think now with this kind of a launch, I think Harley's launch, and I think the response has been, I think things should improve for Heroes, looks like, and that's reflecting right now in the stock price. But I think we'll still wait how the things shapes up in next month and so, and maybe next quarter numbers, how it comes up, then maybe we'll take a call. But I think preferred right now, I feel that if you have to buy any of the two-wheelers, then Eicher and Bajaj remains the top bets in that space.
Angel Stockbroking. Rahul, would you like to comment on Angel Stockbroking? Forget 1 minute. For a minute, it's a comparative. Purely on the business of online broking, or purely on the business of broking. This is one business which has got disrupted because of Zerodha. Is it time now to revisit them now that demat accounts opening has started?
So I would not like to comment anything on this and a broking as a whole.
Fair point. Kunal, is Angel getting ready to rediscover its mojo? I think went to 2000 plus, right?
Yeah, it went to 1800 I think recently, and it fell also very sharply to 1400, 1450 mark in just a matter of I think 3 or 4 days. This is a very strong comeback for Angel One because it's managed to fill a major down gap for itself as well as retrace more than 61.8%, which is a classical comeback for a stock like Angel One. And I think after this kind of a strong, powerful up move, excellent volumes for the stock, it should surpass the previous highs of 1800. So, which means that potentially this could be a very strong momentum breakout for Angel One. 1800 plus could be a target which I would probably keep an eye on.
Okay, Angel One seeing 1800 as that important mark for the company, but for now it's soaring away in the trading session. Let's quickly take the closing ideas from our chartists as well. Naresh, what's the closing trade that you're punching in?
So that's about GAIL India. The stock has come to the retest of the breakout of 114 to 115 levels. And for the last 2 days, it tested those levels and has started making a recovery. So this could surprise on the upside, again go back towards 120 to 125 levels.
It's GAIL for you. Kunal, what about you? What's the closing trade?
So that'll be Bajaj Finance, something which I believe is extremely oversold in terms of the short-term charts. Now trading at 1500 odd levels. I would expect a major short covering coming into Bajaj Finance over the very near term. So that's a buy. That's a stock which I look to buy.
Okay, we were just talking about Adani Ports and how the numbers were really good, but apart from that, you also have Adani Power, which is seeing quite a bit of spikes. So the entire group is now seeing a bit of a reversal because since the start of the trading session, it was on the back foot. So definitely trending high, and pull up an Emami as well. Of course, the numbers were really strong despite the kind of seasonality that we have seen. So 8% higher on that one. Time now to slip into a very short break, but as we do that, listen in to the contra bet that Sridhar Sivaram is suggesting, and that one is PSU banking space.
So I think contra bet, we've been long the PSUs generally, PSU banks, PSUs, and that trade has played very well. We are still very bullish on the PSU banks given the earnings. I mean, that's a segment where people, earlier there was a consensus negative. Yeah. Now I would say it's a 50-50 where some people...
But even the lower order banks and not just the large bank SBI?
Yeah. So we're quite bullish on, there are just 4-5 banks investable in the PSU basket.
So should I start taking names and you will say no for them and yes for the ones?
Of them, barring 1 or 2, the rest are investable actually, and they look reasonably good. Look at their earnings. I mean, they're still trading at 4-5 PE.
But why were NIMs were down? I looked at SBI and BOB, NIMs were down. Managements are saying that you hit a peak in terms of the credit growth. So if the business is not going to be in the expansionary mode, does it make sense just to look at value and then buy them?
So I think over concentration on NIM also is an issue. So what you have to look at is what is the operating profit growth. So you look at the operating profit growth is still growing at say 10 to 15%. Yeah. Your credit cost is broadly stable or down. See, keep in mind that credit
ROAs are also going higher.
So you keep in mind that private sector credit costs have already come down substantially. They are at on an annualized basis 50-60 basis points. Most of the PSU banks are, barring SBI, most of the PSU banks are in the 1 to 1.5% range in the credit cost. That can still come down to say below 1%. So what you're seeing is the operating profit growth is say 15%. Your PAT growth is almost 50-60% even now. And that's coming predominantly because of this reduction that we are seeing in the credit cost. And we think that will continue to play. Some of these banks are trading at say 5% dividend yield now because they have to pay 20-25% of the profits as dividend. So, I mean, whichever way I see, it looks an interesting space. We think that a lot of the re-rating has already happened. From here on, even if you get earnings growth return, that itself could be 20-25%. So, I mean, that's how I'm seeing it. Only time will tell whether we are right or wrong.
Alright guys, now what do we have? We have a market which is just looking directionless. You've got some spikes here and there, that's about it. MGL is down on strong volumes. There is, I wouldn't say negative, but yeah, now Godrej Properties is underperforming quite dramatically. And if you have to look at one volume shocker where volumes are significantly higher than the averages, I think it's Policy Bazaar which is falling on strong volumes. Let's look at all the consumer tech and new age tech stocks. Paytm 830 down, Policy Bazaar down 762, Zomato down. Now the challenge with some of these consumer tech and fintech stocks is that they will rise and they will fall. But when they will rise, they will shoot, and when they will fall, they will crack. So it's not going to be a linear move. When they will rise, they will shoot up, and when they will correct, they will crack down. Unintended, that there seems to be a big change of heart from the investors and also from the promoters, stroke founders, that what are the essentials to survive in auction market. And that I think is getting rewarded in the way how Zomato stock price has gone up post numbers, how Policy Bazaar has gone up off late. But now that markets are convinced that these folks are here to, and they mean business, what is the way forward after the recent run-up?
I think you have to look at first two things. One is which of them is still able to raise money, or at least has enough cash to give them a long enough runway till they reach profitability. And the second is that, if you assume that there is going to be a focus on cash flow and profitability, how much of the top line growth will have to go? Because so far, or at least till they went into IPO, the focus was on trying to gain more and more market share and build up the top line and not worry too much about the cost of client acquisition. So eventually cost of client acquisition has to be brought down to a level where it begins to make sense and you start making operating profit. So some of the ones that you mentioned right now, for example, Zomato is showing some signs of progressing in that direction. The challenge there I still think is quite high because there is the cost of logistics cannot be brought down beyond a point, and the challenge will remain that there is already some amount of pushback from the restaurants and the food suppliers to the margins that they are having to shell out to these companies. They are doing it because of the fact that it brings them new business, but it is very likely that the hyper local market will, in some form or shape, begin to segregate. If you look at Paytm, for example, obviously there the monetization has started to some extent, because if you look at what the vendors are paying them, etc., they have actually moved into being a payment bank of some size, and therefore, to that extent, the fact that they have the largest number of vendors in their fold will probably give them some revenue traction going forward on a continual basis. Many of the others, to my mind, are still struggling with the kind of growth versus profitability syndrome. So I think you have to essentially look at assuming that a few years out they all become profitable. How much are you paying for them today, and how much do you think that they will go up after that? Because obviously, 40% compounded growth is not something that you can factor in for the longest time. India still remains, for example, for a business like Zomato, to my mind, remains a market which is only in a few cities even now. So things will have to evolve. To my mind, some of them are still fairly expensive. But because of the fact that there is now at least a path to profitability, there is a reason to assume that they will survive and therefore do reasonably well over a period of time. We have already seen major problems with ones like Baidu, and I think that's the lesson you have to learn, that too much of a good thing can also be bad. So just because somebody is putting up valuations every alternate day by a few billion doesn't really mean that the real world agrees with that.
No, a fair balance is what you're suggesting, and fair point there. Just quickly marking the earnings for Talbros Auto, because the numbers were flashing for you at the bottom of the screen. That's taken a spike by almost 11%. Look at that vertical move, and that's because the profitability has jumped up 46% year on year. So that's why you're seeing the spike. The other one is Prestige Estate. That one too is high by 4%. If I have it right, the numbers are later today. So maybe ahead of that, we are seeing some sort of sentiment build up on that one. Indian Bank continues to rally hard. In fact, the other PSU banking names as well, Union Bank of India, etc. In fact, Indian Bank is up around 11% as we speak. In fact, since we're talking about what's happening with the PSU space and what the entire setup is looking like, let me bring on board my colleague Prakash as well, because this is an exclusive news break that we have for you. Second PLI scheme for steel sector may come out soon. ET now has learned from sources that deliberation with industry is done, and Finance Ministry and Steel Ministry are finalizing the details of the scheme. Prakash, tell us what are the latest details that you're picking up?
Yes, we are learning from our sources that the Finance Ministry and Steel Ministry have discussed contours of yet another PLI scheme for the steel sector. we are given to understand that the government is planning to launch second PLI scheme by November this year. When it comes to overall size of the scheme, sources are informing that overall outlay could be around rupees 6 to 8,000 crore as per the proposal. When it comes to consultation, sources are informing that industry consultation has already been completed on this proposal, and it would be discussed by empowered group of secretaries very soon. Then after, Union Cabinet will be approached for its final approval. Going forward, sources are also saying that some important sectors would be covered under this scheme. Sectors like defense, automobiles, metros, railways are going to be part of this proposed scheme. Government is also hoping to get better response from stainless steel manufacturers under second phase of the PLI scheme. As you are aware that manufacturing of a specialty steel was focused on the first phase of this the PLI scheme, and the government had allocated around rupees 6,300 crore. Around 30 companies have been selected on the first phase of the scheme. Companies like Tata Steel, JSW Steel, Jindal Steel, Kalyani Steel among the companies selected on the first phase to get PLI benefit.
Okay, fair enough. So we'll watch out for the metal sector on account of that. What are the other stocks which are buzzing around on good volumes? Let's take a look at some of them. The numbers should come up for me on the screen. Sorry, beg your pardon. Just trying to make sense of the details which are coming in. So as far as Gland Pharma is concerned, that continues to rise almost 20%. Bank of Maharashtra is higher by 7%. Praj Industries is doing well. VIP Industries is the other one. But before I move forward, Anand, your take regarding some of these second level private banks, and I'm talking about the likes of RBL Bank, which recently got that investment from M&M, IDBI Bank. There is this entire chatter of how Kotak is likely to take that over. And then, of course, you have AU Small Finance Bank as well, which has seen a massive run up. But now the valuations are getting toppish. Any name that you like from this pack?
Well, if you have to look at the banks, I think especially in the private sector, almost anyone which is of a reasonable quality in terms of technology will do well in terms of taking market share from some of the public sector banks. That's a trend that has been going on for the last 2 decades, will likely continue to go on for the next 1 decade at least. So from that perspective, an RBL or whatever is likely to continue to do reasonably well. The challenge really is that most of the smaller banks especially focus too much on the consumer side, and that means that they are not well enough diversified in terms of the portfolio. So while consumers are doing well at the stage and have been for the last several years, they are missing out on all the incremental gains that are likely to come from the industrial lending, which is where the preference for a larger bank comes from, that you have both a mix of industrial as well as consumer lending, and you are therefore able to manage the cycles in the lending much better. Also, the larger projects can only be funded by the larger balance sheets. So if you are really looking at banks, I would argue that the frontline banks are not very much more costlier than the smaller banks, and the growth right now is not a constraint. All of them are growing reasonably well. In fact, the challenge is being able to raise liabilities, and a better network is always better. So again, it favors a larger bank. So net, I would focus on the private sector banks on the larger side rather than too much on the small banks.
Sure, point taken. Just wanted to address the flashes at the bottom of the screen, and this is an important one. AU Small Finance Bank has clarified to ET Now that there are no raids or any reported employee-related frauds. There were some messages doing rounds, so on account of that, AU Small Finance Bank has clarified. They're saying the detailed message seems to be a case of rumors around the normal course of business based on vested interest. So clearly denying any wrongdoing by any of its employees. They're saying there is no fraud. It's business as usual for them, and the overall tailed message that we have seen is a case of vested interest. They're also saying AU is a granular retail franchise which we are building with strong purpose and transparency. Our track record of last 6 years as a banking franchise is testament to our governance and regulatory compliance. Furthermore, they are sure that they will appreciate that they recently received license from RBI to start the forex business under authorized dealer category. So what they're trying to say is that given that recently finally they have got one of the approvals from RBI. They're making a case that the RBI is not worried about the strength of the bank, and that's why they got one of the approvals. It was, of course, for the forex business, but nonetheless, so that's the important takeaway. We'll get our colleague Ankur to join us and tell us more details on this one. But in the time being, okay, so we have Ankur with us. Ankur, tell us a bit of a backdrop where it is starting from, because during the trading session we did see a slip in the stock price, but it's managed to recover now after the clarification.
So, the bank has categorically said that there is no fraud which has been detected by any of the employees of the bank. There has been no raid. So, there were few of the messages which were circulating in the market saying that employee fraud has happened for the bank. And remember, there has been instances, especially by NBFCs. If you recall the instance of Canara Bank subsidiary Canfin Finance, there were several employees fraud which were detected earlier. So similarly, in that course of action, there were messages which were suggesting that there is some fraud which has been detected by Reserve Bank of India. But now bank has come up and clearly stated that there is no fraud which has been detected here. There is no raid which has happened by any of the regulator. In normal course of business, of course, there is an audit which is conducted by Reserve Bank of India on an annual basis by any of the lender. But here, the bank has clearly clarified that there is no raid which has happened by the regulator.
Ankur, for clarifying all of that and putting the perspective as to what the management is saying. Let me go across to Naresh as well and get his view on the stock of AU Small Finance Bank and even any private lenders that he likes at this point of time. Naresh?
So AU Small Finance has been testing that level of 720, 750, which is the last previous high made in 2022 was around this mark. It tried to break out and then we saw this gap down. Technically, the stock still looks bullish out here. Once it crosses 760, 770, that is where the momentum should come in. So for now, expecting 700, 720 to be the base. And overall in the financial space, continue to like Bandhan Bank. Federal Bank would be the next one, which looks interesting. The stock has been sideways for a long period of time. If it sustains about 138, that could be a big breakout. IndusInd Bank continues to look interesting. So overall, the small cap banking space, even in the PSU Bank segment, the small cap names like PNB, Union Bank of India, etc. look better.
Okay, so that's the take coming in as far as the banking space is concerned. Still like some of the names from the PSU banking vertical. Nonetheless, let's do one thing. Let's go across to Sharad now. He's joining us to talk to us about what the dealing room chatter is like. Sharad, I'm guessing today Whirlpool is on the radar?
Well, yes, in focus we are having Whirlpool, and what we are hearing from the dealers is certain counters are seeing buying coming from the HNI segments. Apart from this, do remember that the company is expected to fully enter the small electrical appliances business, especially in the cooking segment, and the street is expecting that once the company enters fully into this segment, the margins are expected to go up between 25 to 30% from the current levels. Now, of course, this focus would be coming in for the kitchen appliances business in the Indian segment, and also do remember that the company's arm Elica, which is a JV, will be in focus. Now, of course, in Q1 numbers also, the numbers have been very strong when it comes to the consumer durable business, and also importantly, the breakout is expected in the stock coming in after almost 1.5 years. The stock is currently trading above the 200 DMA average as well. Now, today, an important broking note also came from ICICI Securities, where they have maintained a buy rating and given a target price of 1680 rupees, indicating roughly 12 to 15% return potential from the current market prices. Apart from this, they are also estimating that the company will be a beneficiary for the industry as a revival is expected to kick in the second half of FY24 and also on a favorable base.
Okay, so that's the latest coming in on Whirlpool. Anand, what's your take regarding the entire consumer durables basket? Because, I mean, numbers weren't impressive, at least from the, the AC makers of sorts, whether it was a Blue Star or a Voltas. But on the other hand, you have real estate demand, which continues to perk up. Would you rather play through the other names, the cables and wires, the other building material names, the likes of Polycab, Havells, etc.?
Well, if you are looking to play the housing thing, I think your best way of playing it is through the financial markets. Housing finance and the banks themselves are actually a good way to play it. The real estate remains quite difficult to handle because obviously, it depends on where you're going to be positioned. So each of those, the real estate companies have their own quirks. And the consumer durable space again is a derived demand. So while it is something that has shown fairly strong growth, none of them are particularly cheap to my view. So if you are, the simplest way of doing it, as I said, is through the financial market.
Like the financiers of the real estate. But Kunal, what's happening to Reliance? That's again been very, very sideways, 2500 mark, and M&M too. It's gotten its own ripple.
Yeah, I think Reliance Industries is a stock which requires a lot of news flow in terms of movement. Otherwise you look at the phase in good part of 2022 when the markets were moving up higher, the stock remained sideways. In the last 5 months of this market uptrend, the stock remained sideways for major part of the time. I think except for that demerger announcement for Reliance Industries, there was hardly any movement on the stock price, and post demerger you've seen the stock going into sideways. So I don't expect too much of a trend coming back into the stock price unless there is some news flow which is attached or some events which is attached to the stock price. M&M on the other hand could be something which is interesting, because I think after that sharp correction, 7-8% correction in the last week, 10-day back for M&M and yesterday's price action, this could actually be an indication that maybe the stock is trying to settle back into a strong support of this 1500 mark. So for a contra trader or a trader who's missed out on the previous rally for M&M, I think at 1500 levels the stock could be worth a buy. Would look out for 1580, 1600 as a near-term target for M&M.
Anand, you track the primary market closely. Just wanted to get a sense from you regarding Concord Biotech has seen quite a bit of subscription. But if you track that one, what would be your recommendation?
No, I'm sorry, I don't look at the primary market at all.
Sure, there's enough to do in the secondary market itself to try and kind of make these assessments in the primary market. But the class of 21, which was the entire IPO, which saw quite a bit of subscription in the IPO market, all the PB fintechs, Paytm, Zomato of the world, they're all taking a bit of a slide today. Kunal, is this a time to probably look at, buying on dips? PB fintech is down 5%, Zomato is down 4%. What's your take?
No, I think I would probably wait out for this correction to settle in. My belief or my sense is that this correction should have more legs for these stocks, and the classic rationale for that is that stocks like Zomato, PB Fintech, Paytm, these stocks, they made a relative higher high as compared to the previous high, which is just about a week or two back for these stocks. But then in that attempt of the stock making new highs for themselves, even if it was short-lived, the RSIs, the relative strength for these stocks was much lower. That's a clear indication that these stocks have to go into that phase of a pause as well as a phase of a sharp correction. My belief is that if Zomato comes back to 84, 88 levels, that could be a zone to buy the stock. Paytm, maybe the stock corrects to that 760, 750 mark, that could be a better zone to buy. And for Policybazaar, again very similar, maybe closer to 700, 720 could actually be better levels to buy. So at least another 5% to 10% downside is what I would expect for these new age stocks.
Okay, but I believe that for Zomato investors, Kunal, investors do have to wait for that 100 target yet again, because the stock is actually down around 5%. But Naresh, coming to you for the next stock, I want to discuss upon Tata Chemicals, because I know that Kunal as well as you have been tracking this name particularly from 980 odd levels. You were waiting for a breakout, and what a breakout post that 1000 mark. But on the back of the earnings and the negative news flow about the soda ash price cut, we are seeing once again Tata Chemicals around that 1000 odd mark. So at this point in time, with the kind of a closing that we are seeing today, will you be a buyer at this point?
So the follow-up has not been great for Tata Chemicals. Couple of times got stopped out once back in June, July. Again, recently the stock broke out about 1000, 1020 levels, went up to 1060, 1080, and we are back to 1020 mark. So the problem is the stock breaks out, volumes do not catch up in a big way, and there is no follow-up action over the next few sessions. So we're still stuck in the range. Would again look at it once it starts closing about 1050. So for now, it's a stock on radar. No more a position.
Just last 3.5 minutes left for the trading session to close. But one stock which is having a good show today is Manappuram Finance. That's up a good, I think 6-7% now. Yeah, 5% gain coming in. Kunal, you see further up move for this one, because we got the numbers from one of its subsidiaries, Asirvad, as well, and they looked quite strong.
Yeah, I think the stock is at a multi-month high. It's almost an 18-month high for both Manappuram Finance and Muthoot Finance. So the sector itself is doing well. This is a very strong breakout for Manappuram Finance. So if you ask me, I would probably be betting quite strongly on the stock for a potential upside of another 15% at least from current levels. So 165 is the moderate target which I would expect for Manappuram Finance. So would probably advise even traders to look out for the stock with a potential time frame of 3 months at least.
Wow, further upside coming in for Manappuram Finance. But Anand, what's your take regarding gold financiers fundamentally? It's getting a very crowded trade in the sense that each and every bank wants to get into that space. Do you see any differential or any upside in betting on these gold financiers now?
Well, there is a certain advantage of looking at the gold financiers in Kerala, where it is almost a cultural thing. People regularly take loans against the gold. I don't think it's the same kind of activity in the rest of the country. Though, of course, we've had one phase where almost all companies got into gold finance and realized that finally it is not that easy to manage because there are issues in terms of even basic issues like security of the jewelry that you are maintaining at various locations and so on. So I think it's still an operationally tough business to be in. Of course, the advantage is that since it's more or less secured lending, by and large, if the gold prices remain firm or on the upward side, your security value keeps increasing, and therefore your loan value doesn't. There is some amount of cushion on it. Broadly, it's not a very it's a high yield kind of business, but it comes with its attached risks. Not my favorite space.
So that's a take coming in, but just 1.5 minutes left for the closing session. So let me thank you, Anand, for joining us today, Naresh as well as Kunal. Thank you. A fairly listless trading session.